chip shortage, along with the 3-day rule, hammers Tesla stock. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. Also wanted to thank our Patreon supporters. Your support is greatly appreciated. If you'd like some helpful trading tips, as well as charts and special videos, I encourage you to join us on Patreon. And we have a daily show to help support that process. And I guarantee you'll find the information useful. So today's talk is really a disappointment for me. We usually have, particularly now when we're in the earnings zone, a lot of shows designed to sort of slice and dice the data that's come out in a number of different ways. We've been slow on the uptake because we actually developed a concept called the 3-day rule. So what the idea is that usually on the first day that the announcement of earnings comes out, which was Friday, Monday would be the first opportunity to trade it. Usually it takes 3 business days before the analysts are able to carefully comb through the announcement and compare what they're seeing from the company against what their expectations were. And in the case of Tesla, that's kind of what's been going on. Now, where the huge disappointment comes in is that instead of Tesla coming out and just destroying the number as they did based on what the number of vehicles sold was, there are some new wrinkles that came in that were, I would say, a very big disappointment to us and to the company. And the other problem that pops up here is just the fact that you now have a situation happening where on the third day, when we were expecting to see either buying or selling by the large institutions based on the numbers presented by Tesla and the support of their analysts, we're now in a tough position where the answer we're getting from the institutions is that not only did the hedge funds not like the numbers, but the institutions didn't like the story that went with the better than expected numbers. And it seems right now that the biggest driver for negative views is what happened with chips. As you know, Tesla came out with numbers that were a little bit light in the 3,000 to 5,000 vehicle range at the top level of expectations of performance. So what this then resulted in is that the analysts were saying the numbers were good, but there's sort of the actual number expected and then something called the whisper number. So the whisper number for Tesla, instead of 10.3 billion, was more like 11 billion in revenue and possibly even higher than expected earnings. Now, the earnings were a little bit interesting here because not only did you have the EV credits, which have been a source of, is this viable to really consider that to be a sign of a healthy company? That was kind of already out there. The next question that popped up is Tesla announced, Elon announced that they sold $271 million worth of Bitcoin, and they recorded a $100 million profit for the quarter. So what starts to happen is people start saying, well, wait a second, if you're juicing your profitability based on things that you're doing that are not recurring over time and growing sources of income/revenue, then this is a sign perhaps that the company's not doing as well as planned, and therefore you've got to do these creative things in order to boost the numbers that people are seeing. So I really think that part of it is just the fact that, hey, not only are the numbers not as high as we expected, but we're also seeing you do things that are inconsistent with how a well-run, well-operated, well-organized company tends to do it. And therefore, you start to get some question marks in mind. The second phase of this whole thing is that we're now in day 4, or entering day 4. We've gone through day 3, business days since earnings. So by now, we should have started getting analyst upgrades or downgrades. We were hoping for upgrades, but it smells like there's more like a neutral or perhaps downgrades that are going to rule Tesla's environment in the near term. So one of the things I wanted to pull apart is, well, Elon actually indicated that the problems other companies were having when it came to shortages of chips was not an issue for them. That is a valid argument. The problem that's coming up, though, is that, well, wait a second. Yes, Tesla has had to shut down because of a shortage of chips, but it looks as though the problem that they're having is they were able to order enough chips for a steady growth pace of vehicles to be sold, which is good, and it means they're not going to miss any numbers. But on the other hand, they're actually accelerating growth faster on a faster trajectory than the chip supplies that they actually ordered. So no, they're not going to shut down because of shortage of chips. But yes, there's capacity they have produced more vehicles that's going to go unutilized and therefore result in them bringing numbers forward that the market is not happy with. So I think that this is why the stock price is down, because the high point of the expectations for Tesla in terms of where they were going to be revenue and profit wise can't really be met, not because of their own doing, but just because of the chip shortage situation and the inability to increase orders to reflect how fast they're growing. So it was our assessment that the fact that those sales were there to be had, that were not being booked by Tesla without the extra chips, should have gotten some consideration from the folks, the analysts / investment community at the high end. And they don't seem to want to embrace this logic and process, which I think is unfortunate. Among the craziest things that I'm hearing is comments made by Jim Cramer, where he was saying, this is a real sign that GM is kind of closing the gap on Tesla. Therefore, the growth prospects that Tesla may have had are being impacted by how all this might be working. So I was kind of stunned by this logic. The main reason is that, well, there are a huge number of reasons, but the biggest one that comes to mind is the fact that GM actually had a lose $10,000 per vehicle plan to try to put Tesla out of business with their Chevy Bolt. And despite coming in $10,000 under the Model 3 in pricing, GM had a very hard time selling those vehicles and ended up doing a discontinuing. So in my mind, I really don't see, the closing the gap argument being made here. And therefore, I think that it's ridiculous, but I'm very surprised that without Elon saying something, without analysts that are positive about Tesla saying something, we're kind of stuck in this mode of the only news that's riding out there for the company is things related to the crash of the autopilot, investigations by different EPA organizations, et cetera, seem to be ruling the discussion of where the company is. And all of those really aren't burnishing the image and possibility of the company. So I could definitely see why the price is suffering currently. And the question is, how long this is a curve? Well, for my Patreon supporters, once we got the numbers on Friday and we saw the reaction of the market, it was my prediction that Tesla's in jeopardy by about 100 points or 20% on its stock price in this period. One of the big question marks for everybody is, how long is it going to take for this chip shortage to abate, and therefore Tesla can leverage all the resources it has to go after its largest sales possibility. I had received word from a longtime industry veteran at Texas Instrument and other companies that he thought that this was max a 20-week situation. Literally today, I got a text from him with an article about the fact that even if chips were produced, you're having 30 deep ships that are stuck in the Los Angeles port as companies are trying to offload things like chips and other inventory that's coming in from Asia. So this introduces another issue in the supply chain that makes it even harder for the companies to get it done. I actually thought, because Tesla had a Samsung relationship with a plant in Texas, this would not impact the supply chain as much, but you have to consider the fact that they're ordering chips from TSMC, they're ordering from other places, and clearly one way to deal with this would be to go ahead and switch to airplane deliveries, but cargo freight is really expensive versus simply, putting it on a ship 3 or 4 days later. It's coming off at the port and delivered. It's your lowest cost option. And they really can't get her done right now at those ports for a whole host of reasons, but mostly backed up ships in the port, sitting there with people's chips. This has resulted in double ordering, which can be problematic in some ways. And so we'll see how all this works out, but it just smells like it should have been a 20-week phenomenon. But there's a discussion going that this shortage could run into next year, and this causes Tesla to potentially miss the higher end of expected numbers. So the stock therefore sort of meanders down into this lower level than hoped for / expected. So I'd have to say that I don't see a easy way out of this other than, like I said, drop some cargo shipping in, force your costs up, but now you can get inventory, but that inventory is going to be a lot more expensive than if it had moved efficiently by ship. Another sort of question mark that comes out, just produce in China and roll it from there. But again, the problem that's going on right now is at the chip manufacturers, how much can they give to Tesla inventory-wise, given that they have other customers who are committed to for the higher chip count of production, which they can't give to Tesla currently unless they're buying out competitors or other competing entities that are trying to produce. So I just really think that we enter this sort of painful zone for Tesla, where we could roll 100 points lower than we are here, maybe even more. And so if you're a Tesla shareholder and it's a large part of your portfolio, I'd encourage you to consider a little hedging, maybe lighten up on your ownership for a few months until they get this figured out. But, this is definitely not a good situation. And I think it's unfortunate. And I think the company's doing everything they can, but they're sort of stuck with all of these layers of issues that are going on. So what do I think? I think, definitely $600 a share is a possibility, and even maybe high 500s until we get on to the next earnings period, and hopefully that's been enough time for the chip shortage to be addressed. The theory that I'm hearing from people is this could be a 6-month phenomenon, in which case you end up with 2 bad quarters, and now you have all these people, laying out these scenarios. Instead of the sales being down because of a chip shortage, it's because they don't have so much competitors from other companies, and they're having chip shortages too. So, I just think we're in a challenging zone that's unfortunate for the company, and it's hard to see how this works out to the benefit of Tesla, hence my recommendation of hedging or lightening up on positions, etc. So we look forward to your constructive comments about this. Don't forget to like and subscribe. Again, Patreon might be helpful with the charts we provide, as well as sort of daily trade updates on things to think about. The next thing that I wanted to review, as usual, is our health tips. I wanted to encourage you not to forget 25 leg lifts a day. Also wanted to encourage you to consider, relative to COVID, zinc with elderberry, vitamin D and vitamin C in larger quantities to help your immune system. I also had an interesting experience. I got my second COVID shot yesterday, and before doing so, I did laps around the large building that I was at, doing arm exercises, lifting arms side, back, and maybe front for maybe a half mile. And I was actually impressed by the fact that it seemed to improve blood flow in the arms and reduce the amount of pain felt from the second shot compared to the first shot. And sort of bodily impact has been sort of minimal thus far. So you might want to consider that as a way to lessen the blow of the shots that you might get. Also wanted to encourage you not to forget, prior to lovemaking, you may want to consider a salad or something light, because that will enable you to allow the blood flow to be minimal to your stomach, which is now available to other parts of the body. So I'd have to say we're a little disappointed where we're at right now. Wish we had better news. Was hoping that by delaying our broadcast number 2 about the earnings, we get a nice pop in the Tesla stock price. But right now it's smelling like we're going below 650 on options expiration day on Friday, the 30th, 2021, 30th of April. So best of luck in this tough environment. Tschüss, German, au revoir, French, Lehitro, Hebrew, Choda Hafez, Farsi, Stazerje, Russian, Ni Hao Ma, Chinese, Hey Do, Swedish, G'day, our friends in Australia, and in Jamaica we say, Enough respect, walk good man. Thanks for joining us, have a great day, and bye for now.